Input tax credit. What is input tax credit? Input credit means at the time of paying tax on output, you can reduce the tax you have already paid on inputs and pay the balance amount. Conditions to claim ITC. 1. Having a tax invoice or debit note issued by registered dealer. 2. One should have received the goods services. 3. The tax charged on your purchases has been deposited, paid to the government by the supplier in cash or via claiming input credit. 4. Supplier has filed GST returns. What can be claimed as ITC? Every registered person shall, subject to such conditions and restrictions prescribed under Section 49, be entitled to take credit of input tax charged on any supply of goods or services or both, which are used or intended to be used in the course or furtherance of his business, who are not eligible to take input tax credit. Registered person working under composition scheme even when received goods or services are used in furtherance of his business. A non-resident taxable person on receipt of goods and services except on goods imported by him. ITC will not be available for goods or services exclusively used for personal use. Exempt supplies. Supplies for which ITC is specifically not available. Manner to claim ITC. The tax paid when goods are purchased, services are received, goods are imported or capital goods are purchased can be taken as input tax credit while paying the output tax liability. ITC avail tenure. ITC has to be taken till due date of the return for the month of September of next financial year. Annual return filed for relevant financial year whichever is earlier. A registered person can avail ITC only up to 1 year from the date of issue of tax invoice and up to 5 years in case of capital goods. Reversal of ITC. Non-payment within 180 days. ITC will be reversed for invoices which were not paid within 180 days of issue. If part of the invoice is paid, the ITC will be reversed on a proportionate basis. The ITC reversed has to be added to output liability along with interest thereon. In case of input service distributor (ISD), if a credit note was issued by the seller to the HO, then the ITC subsequently reduced will be reversed in case of input service distributor (ISD). The dealers to whom the credit was distributed also have to reverse this ITC. Inputs partly for business purpose and partly for exempted supplies or for personal use. ITC must be reversed proportionately. Capital goods partly for business and partly for exempted supplies or for personal use ITC must be reversed. Claim depreciation on tax component ITC to be reversed. In case of bank and financial institutions. When any bank, financial institution or NBFC is separately registered as a business vertical, it is required to reverse 50% of the ITC if it opts for 50% of ITC at the time of filing regular returns. ITC has been availed on block credits or any kind of input tax credit which was not to be availed.